Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Well, today we continue trading back and forth in this little blue box that we have here. That it is within, well, not within, but the first 2 days of this week are within last week's range. So we don't have a major change on the larger time frame. However, on the daily, we actually mentioned yesterday on the briefing that despite the higher extension, the low around 29.40, if I remember correctly, was pretty weak and probably was going to give way soon, and that the close was really weak. Well, today the market agreed with that, and we had a gap lower below the 100-day moving average, and we closed at the low with a very weak close. So it seems that the market, you can see the price action here, sharp move down, sharp move up, sharp move down. The market in reality is balancing. So we have a short-term balance area here. Notice that the ranges for each session are very elongated. So that's due to the volatility. And remember that later this week we have a major risk event in the form of the trade talks happening in Washington. So no change on the larger time frame. The daily, we see that the market is balancing, and at the close today, the sentiment was really bearish. If we look at a little bit closer on the market profile, you can see how the open immediately pushed lower, only 2 ticks above the open, pushed lower, targeted the 2900 area, and this was I think, in my opinion, the first trading opportunity of the day. I mean, you could have gone short immediately at the open if your risk appetite sees that appropriate. But after that move, you see you have excess of about 10 handles on the A period, and then the B period starts to see a slowdown in tempo around the 2900. When C opens, you immediately see that C closes the double distribution, number one, and number two, it attempts lower but fails to take the B low. At that point, you can call a long trade there, potentially the market getting too short, because if you have the excess that you had on A and you are approaching the B low below the 2900, the market should take that low. Not taking that low is a very strong evidence of an inventory imbalance. So you could have gone long somewhere below the 2900, and you could have ride that bounce back, that squeeze towards 2910 or something like that. Then the second major, and this was the big trade for the day, in my opinion, after D. At that point, the halfback was sitting around, if I remember correctly, somewhere around here. I mean, not very distant from where it finished, but D approached the overnight low, and the rejection was immediate. It started coming back down. If after doing this type of backing and filling on C and D, you reapproach the low, in this case the BC low, and you cannot sustain an extension, that confirms that the market cannot go through, and then you have a major squeeze of the shorts, so strong that it took the A high, sorry. That was another great opportunity. Then later in the session, the market tried to get back deeper into the overnight, and then there was some headlines on the trade front, Trump saying some things, and the Fed as well saying some things about what they're going to do, and that created a lot of volatility. But the overall picture that we need to see is that we attempted to probe inside and close part of the gap, but the rejection was very strong. At this point, you have a very strong rejection. You get back into the value area, and there's no such a big excess on the low. So the market started going lower, extended the low, and ended up with an incomplete auction to the downside. Now, if you look at the profile is a very well balanced profile. You see that the POC is exactly at halfback. It has a very strong excess at the top and the gap lower held. So two things for me: you have the lower value, you have strong excess, you have the gap holding, and you have an incomplete auction. So I think that the odds are pretty good that at least we see an extension below 28.90 tomorrow. Is it going to be sustained? I cannot answer that question. I think nobody can answer that question because that will depend on the market appetite, and you don't know if some new information is going to come up. But now we are approaching, well, tomorrow's midweek, and the trade talks start on Thursday and Friday. So I would expect that, yes, there could be an extension, but at some point tomorrow, or maybe heading into Thursday, the market should get really quiet unless there's leaked information about what they're gonna do or discuss on the trade talks. If they leak information to probe the market, saying like the agreement is almost ready and stuff like that, you could have a move up. But if they have negative information, well, I doubt that if they have negative information, they're gonna leak it. That probably will come towards the end of the week. But as I said, anything can happen. So given the price action today, the gap holding, the excess, and the incomplete auction, I think that at least you will see a probe below this level. So focus for tomorrow, development value relative to today's. I think it's pretty safe to take halfback of today as a very major reference. If you start getting acceptance above halfback, that brings into play this excess left over here, and that definitely denotes change versus the close today. The current status, I mean, the market should, hold this move that we saw late in the session, and the likelihood is that if that holds, you will see an open somewhere around here. If you see an open below, pay attention to whether it continues quickly or it retraces quickly. That will be my take. One more thing, looking at here, this 2900 area is being a magnet. You see how it reacted here, here, here. It created the bounce today, and now the overnight, although we closed lower, it's heading back there and staying there. So keep an eye on that, and also keep an eye on this. What I have here is a 200 moving average on the 30-minute continuous chart, and you can see how it's been reacting very accurately in the recent sessions. So trade well, make your analysis, and keep your powder dry ahead of the risk event later in the week.